Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Today, I'd like to talk with you about reverse for purchase. This is an incredibly underused way to use a reverse mortgage. It's a fantastic program, and it's how I plan to use a reverse mortgage once I retire and sell my current home. But I think the best way to kind of explain how the reverse for purchase program works is just imagine with me, years and years ago, you set sail on a long journey. When you purchased your home, you set sail, and it was a hard journey at times, very difficult at times. Other times you hit nice, smooth sailing. You're just cruising along with the breeze and following the little waves and swells of the ocean. But you have overall worked hard for years and years, and now you're getting a little tired, and you say, I want to enjoy this journey without having to row every day, right? Because you've been rowing, and other times you coasted along. But overall, you've been rowing a lot. With a reverse mortgage for purchase, your current home is like a sturdy old ship. It served you well, but maybe now it's too big. It's too costly to maintain, or it just is not the right fit for the next chapter in your life. You want a new ship that's better suited for smooth sailing in retirement. However, instead of depleting your treasure chest to get a new ship, you use part of the proceeds from selling your old ship. And you then combine that, or you then use that as a down payment. The rest of the cost for this new ship is covered by brand new sailboat with giant sails so the wind can catch it at your back, so you can sail on through the rest of your retirement without ever having to worry about making any other payments. So now you're free to enjoy the voyage. You don't have to row anymore. The loan balance gently drifts with the current, only needing to be settled when you disembark the ship, right? Whether by selling the home, moving out, or passing it along to your heirs, and then they might sell it or refinance it, and then they start rowing themselves at that point. But this way, you keep more of your treasure chest, those big, fat, golden doubloons or whatever, right? And you secure the right home for your lifestyle, and you just sail into retirement or through the rest of retirement with financial peace of mind. That's what we're going to talk about today. We're going to go over the details of how all this works and how you can structure this, because unfortunately, most people don't know that they can purchase a new home with a reverse mortgage. And even those that have heard of it don't understand how it can work. And the same is true with reverse mortgage professionals. I've been teaching this class since this program came into existence in 2009. See, prior to 2009, reverse for purchase did not exist. If you wanted to use a reverse mortgage to buy a home, you actually had to buy a home, get a new mortgage, and then refinance it after a certain amount of time. Sometimes it was, for some lenders, it was 6 months. For some others, it was a year. And you had to wait and pay the mortgage and qualify for this new mortgage. And then you could get a reverse mortgage and pay that loan off. In 2008, I think is when when it was passed, and the first reverse mortgage for purchase, I think it was done probably at the end of 2008. I started teaching this class in 2009 for real estate professionals. And it's still, a lot of them, I talk to them and they say, oh yeah, I've been to your class or I went to other classes and I still don't quite understand it. Until a real estate agent has gone through it, they really don't understand how it can work. And also, too, part of the problem, in all honesty, with the hot real estate market we had since COVID, and still it's still a pretty good market. I remember days when, hey, you're doing good if you could sell your home in 3 to 6 months. That was a good deal. Back in the early 2000s or late 90s, and that's just the way it was. But now, if your home's on the market for more than a month, it seems like you're stressing out. Oh my gosh, why isn't my realtor doing what he needs to do? So you got to understand that when people put in offers, especially if there's multiple offers, a lot of realtors do not understand reverse mortgages, and they'll look at this and say, oh, this person's wanting to use a reverse mortgage to buy the home. I don't understand. I think it's really complicated. We just let's take this other offer that's offering $10,000 above the sales price. And then they just trash it, so you don't even have a chance. I've got some people that I've been working with, they've been trying to get a home with a reverse mortgage for a year and a half. Now, in their specific situation, they really want to buy a condo in this one complex. And the few times that it came up, it was when the market was pretty hot, and the people had multiple offers above asking price. So that made it kind of challenging. But one thing I do with reverse mortgages for my customers is I send a letter along with it, and I'll call the listing agent and explain how a reverse mortgage works, and that really the people who qualify for a reverse for purchase are better qualified, better customers, more financially sound, less likely that the deal is going to fall through. In fact, I've never had a reverse for purchase deal fall through. So it's a great loan, I think. So before we get into it, if you have any questions at all today, give me a call at 303-467-7821. That's my direct line. My name is Bruce Simmons. You are listening to Reverse Mortgage Radio, and I am the reverse mortgage manager with American Liberty Mortgage right here in Denver, Colorado. You can reach me also online at reversemortgageradio.net. reversemortgageradio.net is my website. You can go there and download my free consumer guide. You can get a free quote as well on my website. You can view a lot of good information on there, as well as video testimonials from existing customers. These are real people who talked about how much they appreciate the reverse mortgages and what it's done for them. So anyways, back to the program now. Basically, before we can dig into the details of how a reverse for purchase works, we need to explain how a reverse mortgage works. A reverse mortgage, most of the time, is an FHA-insured loan that's specifically designed for people who are 62 and over. Only one person has to be 62. So if you're 65 and you're married to a 55-year-old person, we can do the loan in your name, since you're the one that qualifies, and your spouse would be considered a non-borrowing spouse. He or she can still stay in the house and has all the rights. Well, not all the rights. If you have money available left over and you pass away, any money that's available in the reverse mortgage is frozen at that point, because your non-borrowing spouse is not a borrower, right? And so he or she cannot borrow any money because they're not a borrower. So any money that's available from the reverse mortgage, if you're receiving a monthly payment or have money in a line of credit, that gets frozen when you have a younger spouse. Now, if you're pulling all the money out, say for a reverse for purchase, then it doesn't matter. Your spouse, who is not old enough right now, they can continue to stay in the home if something happens to you. So they're protected. Let's say after you close on a reverse mortgage for purchase, you pass away, you have a heart attack, and you drop over dead. In that situation, your spouse can continue to live in that home as long as he or she wants, as long as they do 5 things. Now, this is required on all reverse mortgages. Now, these 5 things are things you would do anyway if you own the home free and clear, okay? So there's nothing unique about it, but you have to live there as your primary residence. Ding, that's number 1. You have to pay your property taxes. And it doesn't matter if you own your home free and clear or not. If you don't pay your taxes, somebody's going to pay them for you, and you're going to lose your house. You have to keep your home insured, which obviously you're going to do no matter what, because if you end up with a fire and you're uninsured, if you own your home free and clear, you got nothing. You got an empty lot, and that's it. You don't want to be there, so you always have to keep your home insured. You have to maintain the home, which, as a high-quality homeowner that you are, I'm sure, because only high-quality people listen to this show, you're going to maintain the home. And you're going to keep your name on title. What that means is the house is yours. It's your house. You can paint it purple. You can add a bedroom. You can do whatever you want with the house other than rent it out. You cannot rent it. If you leave the home and you rent the house, you're no longer living there as your primary residence, and that's the first thing that I checked off. So you have to live there. Now, you can rent rooms in the house. You cannot do short-term rentals, though. You can't do it like Airbnb type stuff. But if you wanted a roommate and they pay you $500 a month to live there, that's fine, as long as you are living there as well. Keep all that in mind. So those are the things you have to do to maintain the reverse mortgage. As long as you're doing those 5 things, the lender can never, ever, ever kick you out of the home or require the loan to be paid. Some people will ask me, well, what happens if I outlive the loan? You can't. You cannot outlive a reverse mortgage unless you live to be more than 150 years old. Okay? If you make that, then I don't think you're going to have to worry about paying a mortgage, in all honesty. I can't imagine that a lender is going to require you to pay the mortgage. That would be some bad press if the lender comes and kicks great-great-great-grandma out on the sidewalk because she's 150 years old and still living in her home. So those are the things that you have to do. Okay? Now, the way the reverse mortgage works is it's a loan against your home. That's all it is. Just like any other loan you'd get. You're charged interest. Every loan you're charged interest on. It doesn't matter what kind of loan you have. A home equity loan, a credit card, a car loan, a student loan. You're paying interest or you're being charged interest in the case of a reverse mortgage. Because with a reverse mortgage, no payment is required. We never, ever, ever require a monthly payment. However, since you're still charged interest every month, that interest has to be credited or debited somewhere, right? You're charged this money every month, but you're not paying it. So what happens to it? It gets added to your loan balance. If you borrow $100,000 on a reverse mortgage, 5 years from now, you might owe $130,000 or whatever it works out to be, however much the interest has accrued over the years. You're also charged something called mortgage insurance. Mortgage insurance is something that goes to the lender. Well, it doesn't go to the lender. It goes into a pool. FHA requires mortgage insurance on every single loan they do. And that mortgage insurance, just like any other type of insurance, that premiums get put into a pool of money. Then when there's a claim, that money comes out of that pool. So that it all gets pooled together and then the money comes out. As long as the pool stays at a certain level, there's no issues, right? And even if it drops below a certain level, you cannot be required to pay any more than what you're being charged. But what happens is, let's say that there's a reduction in the value of your home. Your home is worth $500,000 today. 10 years from now, your value has grown. Let's say it's now worth $800,000. But then, boom, there's a big market crash, and now your home is only worth $400,000. You lose 50% of the equity in the home. But your loan balance has grown. Say it started out at $200,000, and now it's grown to $500,000. So you owe $500,000, and your house, because of this big recession we had, is only worth $400,000. Now, as long as you continue to live in the home and pay your taxes and insurance and maintain it and all that stuff, it doesn't matter what the value of the home is. It could go to zero and you could owe $1 million. And they can never, ever, ever come after you to kick you out. Or if you pass away, the lender can never come after your estate for any loss or go after your heirs. That's what the mortgage insurance is for. So let's use this scenario. You owe $500,000 on the house. It's only worth $400,000 now. In that situation, if you were to pass away or you had to move to assisted living, then you can just sign the house over to the lender and walk away. The lender would sell the house for whatever they could get for it, and the mortgage insurance, the claim, so they have a claim on that. They take money from that big pool of money, and FHA pays off the lender with that pool of money. So that money then goes to pay whatever the lender would have lost. So since the lender didn't lose anything, they're not going to come after you, your estate, or your heirs. Now, most of the time, what's going to happen is your house is worth $800 and you might owe $500 on it, and you pass away. Your heirs inherit the home worth $800,000. They sell it for $800,000, pay off the $500 that's owed, and they inherit the difference. That's one of the biggest misconceptions people have. They think automatically the bank takes the home and keeps all the equity. That is not the case. Okay, let's put that out on there right now. That's not how it works. But so generally, that's how a reverse mortgage works. And sometimes, let's say you have to pay off any existing loan that's on the home. If you qualify for $200,000 and you've got a $150,000 mortgage on the home, that $150,000 mortgage has to be paid off out of the $200,000 that we're loaning you to start with. So you take the first $150,000, pay it off, and then you've got $50,000 available to you. You can take that money any one of 4 different ways. You can receive it as a monthly payment where we deposit money every month in your bank account. We could set up a line of credit where that money is just available to you if you ever want it. You could do a lump sum. Now, there's certain restrictions on how much you could take in the first year of that, but you can take money as a lump sum, or you could do a combination of all. Let's say you need $10,000 to eliminate some bills and you want to leave the rest of the money in the line of credit. You could do that with a reverse mortgage. Or let's say if you own the home free and clear, you just like the idea of having the security of that growing line of credit, because the line of credit grows over time. I don't have time in this show to get into that. I've gotten into it in past shows, and you can go to my website at reversemortgageradio.net. All my different radio shows are up there, and you can scroll through. Actually, like 7, I'm going on 8 years now I've been doing this show. And you can scroll through and see all my different radio shows about everything I've talked about, and find the one that has the line of credit. In fact, I probably should do another one, just like it's been over a year, I think, since I've talked about the reverse for purchase. But the line of credit does grow over time, and that's one of the beauties of the program. But in the case of a reverse for purchase, you're wanting to get as much money as possible to buy a home. Let's look at a scenario. You have an $800,000 home, and you need to sell it. You've got a $200,000 mortgage on it. There's going to be some closing costs. I didn't crunch these numbers beforehand, so these are just general numbers. But now you've got, say, $50,000 in cost to sell the home. So you end up cashing out with $550,000. And you automatically think, well, I don't want another payment. I'm not going to get a payment now because I'm 70 years old and I'm not going to continue with a mortgage payment for the rest of my life. So you're limited to buying a house for $550,000. Now, maybe you can buy a house for $550,000 that fits your needs. That would be fantastic. And in that situation, why would you do a reverse mortgage? Because you don't want to dump every penny you've got from the sale of that other home into the purchase of this new one. So let's say you buy a new home for $550,000. You can get a reverse mortgage for $200,000 of it. Then you only have to bring $350,000 to closing. We make up that gap by giving you a $200,000 reverse mortgage. You still have no payment on that new home. You've got a $200,000 reverse mortgage on it. It's worth $550,000, so you still have $350,000 in equity in the house, all that cash you put down, but you've kept $200,000 in your pocket, and you have a house with no mortgage payment. That's a sweet deal. The other way to think about it, let's say you can't find a house that fits your needs for $550,000. You need $750,000. Well, now maybe you could get a reverse mortgage for $200,000, and you buy this $750,000 home. You put $250 or $550 down on it and get a $200,000 reverse mortgage. Or maybe we could loan you $300,000, and in that case, you get a better house, and you've got less money down. Now you only had to put $450,000 down, so you keep $100,000 in your pocket, and you got a better home, a newer home with less maintenance than you had before, and no mortgage payment. That's a win-win-win situation. It's a fantastic situation. But I'm going to get into the weeds a little bit here because this is what I plan to do when I retire, depending on interest rates and how much I can sell my current home for. I'll probably do this before I retire, in all honesty. I'm going to be purchasing a new home. Right now, my house is like it's a multi-level home on a 10,000 square foot lot. I love to garden, but the problem is I'm in a cul-de-sac, and all these houses around me including me, have these giant trees. Back, when we bought this home in 1998, my wife and my son, then he was just a little boy, probably, I think he was 4 years old or 6 years old, something like that. On Arbor Day, they went down to Westminster Park or whatever, and the city was giving out trees, oak trees, and they handed it to my wife, and it looked like a stick, she said, and she wasn't even sure which end went in the ground. But she went out out in the backyard, and her and my son planted this tree. It's named after my wife. Has to name everything. She named the tree Thomas after my son. But anyways, that tree is now 35 feet tall and shading everything, unfortunately. So I like to garden. I've got way too much shade in my yard. My goal, eventually, I'm going to probably move up into the Loveland Berthoud area. I'm not sure. I want to find a place with like an acre where it's open. And I'm going to have a small grass yard, just something, a fenced-in yard that the dog could stay in and stuff. But then outside of that, I'm going to have my garden so that when I get too old to care for the garden, I can just let it go to weed, not weed, weeds, like bad things that I like, that I hate and I have to pull up all the time. Not that you smoke, okay? I don't do that. But that's my goal. So I'm going to have this huge area for a big garden because I like to grow giant pumpkins, and I haven't been able to grow a giant pumpkin in about 4 or 5 years just because I don't have enough sun. And eventually I know I'm going to get to where I can't work as long as I want to in the garden. But that's my goal. And that place is probably going to cost, I don't know, $600,000, $700,000. And hopefully I'll be able to sell my home for about the same amount of money at that time and get some cash, get cash out. But what I plan to do, instead of taking as much money as I can from the reverse mortgage, let's say I could buy this $700,000 home and I can get a $200,000 reverse mortgage, and I've got $600,000 that I could put down on this house. I'm going to put all that $600,000 down on this $700,000 home, and I'm going to get a $100,000 reverse mortgage. Well, wait a minute though, Bruce. You qualify for $200,000. Why wouldn't you do the full $200,000? Because then what I'll have is I'll have a growing line of credit for $100,000. And in 10 years, that $100,000 might be $200,000. And in 15 or 20 years, it might be $400,000, given the rule of 72. So over time, that line of credit will grow. And unfortunately, I decided to look into long-term care insurance too late, and I don't qualify now. And neither does my wife. So we don't have long-term care insurance. But this is kind of going to be my long-term care reserve account. Now, I know a couple $100,000 isn't going to go very far, especially 20 years down the road or 15 years down the road. But it's a start. It's something at least, right? So I'll have that available to me. And then if interest rates drop and my property value goes up, I could refinance. That's another thing that's so good about reverse mortgages. Just like any mortgage, you want to get into the house, right? And they say, marry the house, date the rate. In other words, you're not going to keep that same interest rate you're at today. The interest rate might be 6.5% or 7%. But if they drop down to 5%, you're going to refinance. And you can do that with a reverse mortgage. The only thing is, it's not guaranteed with a reverse mortgage because we have to be able to loan you enough on the new loan to pay off your old loan. But your old loan is bigger than it was when you started. Whereas with a conventional mortgage, the loan that is on the home currently is going to be less than what it was when they started because the homeowner's been making mortgage payments all this time. So I don't care if the rates are high at the time that I want to do this. I'm going to do it anyway because I know that if rates come down in the future, odds are property values are going to go up. So if property value goes up and rates come down, then I'll qualify for more of a larger value. So let's say, for example, when I do this, I might qualify to get 35% of the value. And if the value is 700, but let's say the value goes up to 850, and now I could qualify for 40% of 850 now. So it'll still be a benefit. No matter what, I'm going to do this loan. And my wife knows it. My financial advisor knows it. This is part of my financial plan to set this up this way. And I just think it's nice to have that emergency fund. If something happens with other assets that I can't access for some reason, this money in the line of credit is 100% guaranteed. It's called overfunding a reverse for purchase. I know it's a little quirky, and if you don't totally understand how a reverse for purchase works, don't even try to wrap your mind around this overfunding thing that I'm talking about. But I think it's a great idea, personally. And maybe you don't, and maybe you want to talk to me about it. You can argue with me about it. That would be great. I'd love it, because I love debating things, and whether it's politics or money or different sports, I love all that stuff. Getting into a good rousing debate about it. No fisticuffs or anything like that, but just words, and no name calling either. But that's one of the rules my wife and I have. No name calling. And you also have to finish the argument. No walking away. If you get into it, you can't walk away. I walked away from my wife once, and not going to happen again, just because she was getting a little extreme on me. But either way, the Reverse for Purchase is a fantastic program that's completely underutilized. If you are a reverse mortgage professional, a real estate agent, please call me. I would love to come by your office. I could do a 2-hour continuing education course for you. You get 2 hours of CE credit, and it will help you out to learn a little bit about this program, because this demographic of people is continuing to grow and grow and grow. If you're not serving the elder community as a real estate professional, you're missing out on a lot of money and a lot of fantastic customers. I've got the best customers in the world. I've got to say, I probably closed well over 1,000 or 1,200 reverse mortgage loans over my career. And I could count on one hand the people that I truly, truly did not like. And that's a blessing. That's just a side benefit of this fantastic job that I do. But however it is, please call me with any questions about reverse mortgages. My number is 303-467-7821. My name is Bruce Simmons, and I'm the Reverse Mortgage Manager for American Liberty Mortgage. Again, it's 303-467-7821. You can visit me online at reversemortgageradio.net. Next week, usually on Tuesday or Wednesday, this program gets uploaded to my website. You can listen to the entire program if you just tuned in and you missed most of it and you say, hey, that sounds interesting, I want to hear more. You can either just call me and we could talk, or you can go to my website and listen to the entire show. And you can go back on other previous shows as well. Thanks so much for joining me today. I really am glad that we had this discussion, and I hope to talk to you soon. Have a great day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.